Good weekend, all. Ira Epstein of Linn and Associates with your metal market update, and this is your weekend edition, and I'm putting this out unusually on Sunday, the 27th of September, 2020, about 6:10 in the evening. This will not be my habit. I will either be putting these out Friday after the market or Saturday mornings as we fall now into the fall season, but I had so much to do this weekend in getting my home ready for the fall season. Wanted to take advantage of the last chance, if you could, to spray wash and all that. We were in the 80s this weekend in Chicago, and we're going to be in the 40s and 50s this week. So the change is here, and I wanted to take advantage, so I apologize. We're getting a nice rally. We saw President Trump's nomination. It was the front runner, as we all thought. Now we've heard on TV today what everybody thinks from the different parties going ahead with the nomination this close to an election. That's over. The debate, presidential debate, the first of three, as I understand it, begin Tuesday night. I'm sure we're all going to watch. And that debate has a way of labeling what each party expects and what the people that watch it expect for the second and third debates. We're all going to tune in because we're expecting certain things out of Mr. Trump, certain things out of Mr. Biden, and who does well and following that. You know, at the end of it, the Republicans and Democrats will both say their teams did great, but we'll make the decision. In the metal markets, a little bit of a bounce tonight, but that's about it. Copper market fighting that battle. As I told you, I still think the 295 area is an important zone in that market. But on these charts that we do in this particular video, we're going to look at one monthly chart, then we're going to move over to the weekly charts. I've already put out my weekly edition yesterday, by the way, for all my subscribers, where I say for longer term trades, I want you to buy here, sell there, do this. I give you the overview here, not the Rex. As you can see, we still have a pattern of higher lows, higher highs on the monthly chart. In order to do damage, you've really got to get back under this break low, and that break low right here is 1668.60. Without doing that, what you do is you keep the pattern of higher lows, higher highs. Now, an important thing to remember, whether it's a monthly chart, a weekly chart, daily chart, on a Bollinger Band, that's this black dashed line, it's an algorithm designed to keep the market trading within the band 95% of the time. So when you had these couple of weeks out of it, you know that I'm going to tell traders, no, I don't think that the pros are buying outside of those bands. I think they're taking advantage, waiting for the market to come back in them. When we take a look at a weekly area chart of just closing prices, you're back down to key support here. You went right back from this high point to the 1865 level, and you're sitting at 1859.40. You're now at what we call a nice point where the market has to decide from here, does it accelerate again or find support at that number? When we go to a weekly bar chart, which is different because the weekly close is only looking at closing prices. This has the extremes of the highs and lows. Well, the pattern's different. You've got one of lower highs, lower lows, yes. You've got the 18-week average at 1865. The market's hugging it just the way it did. Very similar in the sense there. The market's Bollinger Band, you got over it these weeks right here. 1, 2, 3 weeks in a row. And I know there's a fever that builds in the market. People going, I can't stand it. I got to buy into that. It's getting away. It's just going to keep running. Whereas me, with the voice of reason, I think, saying, no, I think you'll have a better opportunity. Boom, you had that opportunity. Little did I know it was going to go back to the 18-week average and set up a downtrend, but it is. And at this point in time, who's controlling the market? The bears are. You've got the swing line down. You're under that 18-week average. You'd have to get over 1975.40 to negate this pattern. In terms of momentum, it's down. So in summary, all three elements are still bearish on this chart. Swing line down. This part of the market pointing lower. But there is an element here that longer-term traders look at. A lot of longer-term traders, they don't care about the daily noise. They like coming in at key moving averages, so keep in the back of your mind. Those that are just looking to own the market at different levels, they'll be looking at 1865, 1518, the 45-day that I don't have on here. They're going to be in there supporting the market at those levels. in the gold-silver ratio on a weekly area chart of closes that is very different looking than the daily. We are still in the bearish bias since you're under this. You're climbing up, and I've been pointing that out on the dailies. You're seeing that, and I would expect a peak in this 83.80 area. So you can still get silver losing a bit here to the gold, and look what silver did. Silver also had 1, 2, 3 weeks over in a row. Then it started playing games with this chop action and then right back to the number. It did very well. It found nice support, if you will, at that 22.48 level, the 18-week average. Just like I said in gold, I think the long-term traders are coming into the markets at these points. No, it's not something I teach, but I understand methods. And that is one of the methods I think that they're using. In the copper market, the weekly chart trend is still up. You have to take out 291.15 to break the pattern of higher lows and higher highs. We'll see if the market can do it. It's 297.30 at this point. In the platinum market on the weekly, you've got a higher high, lower low. You've had no trend per se. You also had been fighting at this upper Bollinger Band and the market pulled away from it. I don't see anything here other than momentum still pointing down. And last on the dollar index, if we take a look at this, you still have the pattern of higher lows, higher highs. I would expect very serious resistance to be encountered in that 94.84 level as the market still has upside momentum, but it's not in an uptrend. The swing line is up, the bias is down. What I teach in my charting course is that's often where a resistance point likes to be seen. You know, 5:40 in the morning, I get up each day, unlike these weekend editions that I do, and I really talk to my traders as to what's going on. I give them ideas from that as to what's going on in Asia, what's going on in Europe overnight, the American reports that are coming out for the day, what the chart action has looked like overnight, with very specific buy and sell ideas. Lots of them. So if you're looking for that in and out, if you're looking for, like what I do on the weekend, longer term trades, I match this with once a week for the subscribers, a review of all the weekly charts with specific longer term buy here, sell there ideas. And I think you'll find that at the cost of $7.95 for 30 days to try this out and get information on all these markets, you got a handful. Think about it. You buy a cup of Starbucks, right? Now you're getting this every day. Now you don't have to get up at 5:40. Well, actually you'd see it about 6:20 in the morning to see it. It's there, it's waiting for you. It's not meant to be, oh, Ira said I have to buy it right this minute, now it's 2 hours later. Nonsense. It is good throughout the trade session. That is the point that I'm making. And I speak as though it's good throughout the trade session. So go to our website. The information is under the word research. I will see you tomorrow. Take care.